Hello everyone and welcome to the channel. My name is Brent, and in today's video we're going to go ahead and do a quick M1 Finance dividend portfolio recap for the week. We're going to go ahead and cover the 28th to the 4th of February going into March of 2022. We're going to go ahead and quickly hit on 5 areas. Number 1, the overall performance of the M1 Finance portfolio. Number 2, the weekly performance in comparison to the main indexes. That means the S&P 500, the Dow Jones, and the NASDAQ. Number 3, we're going to go ahead and cover the activity over the past week. What did we buy? What did we sell? And the dividends that we received. Number 4, the current portfolio dividend income. Every week we're buying new shares. Every week we're having positions that raise their dividend. We're going to go ahead and take a look at the current dividend income of our M1 Finance portfolio. And number 5, we're going to cover 2 companies that are on the downtrend right now that we are buying going forward. I'm going to go ahead and be splitting up my positions, or my buying power, between these 2 positions this week. So again, if you guys are brand new here to the channel, have not yet subscribed, go down below, hit the subscribe button here, hit the all bell notification to be notified every time we release a brand new video, and you'll get all notifications. And with that said, let's go ahead and dive into the M1 Finance portfolio. So here we are on number 1, the overall performance of the portfolio. Now we have pulled back off our highs. I believe our highest point this position or this portfolio was up 77.7%. So has pulled back nearly 8 to 9% since the initial rocky period here. We can see that we had a high in the portfolio of right around 43,275, somewhere around there, 43,421, right there on the bottom right hand, or right here is where I'm looking at as the portfolio's high right there. And we have pulled back roughly $1,000 or $2,000 off those highs. All right, so we're not near it. You can see the downtrend here over the last quarter. We're not bad overall over the past quarter. Our portfolio, into 2022 right now is still slightly positive. This is where we did a bunch of selling. We kind of restructured our portfolio. So we sold quite a bit of our positions off, and then we kind of re-entered the market here in January after positions had been dipping a bit, and positions continue to kind of dip throughout the remainder of 2022. So overall, I believe that we're doing fairly well. Our 3 best positions right now are number 1, Apple. This has been number 1 for quite a while. Number 2, Main Street Capital, and number 3, Lowe's. Look at the difference there between Main Street and Lowe's right now. They're very neck and neck. So Lowe's, it depends. I think they had a positive week this past week, so that really almost put them in second place, but they've been kind of battling out there for quite a while. Then we have Lockheed Martin, had a huge gain this past week, and they are right up there in 4th place, very close, right behind Lowe's as far as total return. Our worst positions in the portfolio are Clorox. This one's down. It's down about 25% now. We put about $2,000 into this one. It's at $15.72. So it's down right around 25%. This is incorrect. I don't look at this. You can see we're only down $407, which would put us about $2,000. You take away 25%, that's $1,500. The second position here in the negative is Starbucks. Now this is one that we have been buying. Talking about positions that are on a downwards trend, Starbucks is one of them right now, and that's why we're kind of buying it up. It's in a good position. It's offering a pretty good yield, and we've been kind of adding to it week by week. We have Colgate here in 3rd place in the negative, down 1.14, and we have IIPR down 0.19%. So those are our 4 negative positions in the portfolio, whereas the rest of the positions are pretty positive. Now, let's take a look at the 1 week activity. So 1 week wise, we did have some dividends that came in. We sat through some ex-dividend dates. So, we're looking at the weekly performance now. Our market gains for the week are actually positive. We made $309.66 in market gains. That gives us a total return for the week of 0.83%. If we look at the index here, the S&P 500, it is down for the week 1.27%. So down for the year 9.18. The Dow Jones is down a whopping 1.3% for the week. They are negative by 7.49% year to date. And we have the Nasdaq here down a whopping 2.78% this past week. This is in last place as far as positions year to date, down 14.9%. So our portfolio on a weekly basis did very well. We can see that this had been primarily helped out by Lockheed Martin. It shot up 12.65% this past week. So that helped up the portfolio quite a bit. Hormel Foods popping up nearly 6.75%. Essex Property Trust, ABM Industries, WP Carey. We can see we have some defensive positions, due to the current talks, what's going on overseas. Lockheed Martin's one of those military contract businesses. So it popped pretty nicely this past week. Then we have some of our safer plays with Hormel Food, Johnson & Johnson, Merck and Pfizer, Johnson and Lowe's. Looks like we have some real estate in here, WP Carey and Essex Property Trust. Digital Realty Trust there, about 0.97. And for the negatives this week, we have financials. So financial, JP Morgan down the biggest this week, down 9.17%. Just in a single week alone, which is actually pretty crazy. I don't think I had looked at that one. I'm going to go ahead and pop that one over here for the time being. Methode Electronics down 7%. Avery Dennison down 6.71%. So those are our top three losers of the week. But we did have more winners versus losers, which puts us positive in the week overall. We have $150.76 of buying power this week. Some of that does come from dividends. So this past week, we had the 28th, which is right there. This is when we had that order fulfilled on Monday. So on Monday, we did make one purchase that was on Starbucks. We had it $127.66. As of then, we had two companies pay out dividends. We had Siggy paying out $6.20, and we had Pfizer. Check out that dividend on Pfizer, $16.90. So between these two positions right here, we made $23.10. So that's nearly $25, a quarter of $100 made within just two positions, which is pretty cool. Then we had our deposit there of $127.66, which gives us our grand total to invest this week of $150.76. So I'm going to be splitting that by two, and I'm going to go ahead and invest $75.38 between two positions. That is what I'm going to be doing. So we've kind of discussed, one, the overall performance of the portfolio. Number two, the weekly performance of the portfolio. Number three, we went over the activity, the dividends, the past buys of the week, and now we're going to go into number four, the current portfolio dividend income. So this can be checked out by going into our holdings, and I actually use a separate website for this, but because I purchased Starbucks last week right here, all I'm going to do is look at the positions that I bought last week, head over to my Track My Dividends page right here, go over to my M1 Finance portfolio, and in here, we can see that our current portfolio income is $1137. So $1,137 is how much we're currently making. And we did purchase some Starbucks last week, so all I need to do is click on the stencil right here. We have to update the shares. So I now have 3.33695. So 3.33695. And my cost per share, it's going down every week now, right? Our cost per share right there is 92.12. So right here, 92.12. Our cost basis per share is going down. So we can see right here, we're making $3.80 per year from this position. Once we update the holding, it now goes to, look at that, $6.54. So our total dividend income went from $11.37 per year to now $11.40. So we increased our dividend income roughly $3 and some change. Rounding there to make it even, we increased our dividend by about $3 and some change. So that's pretty good overall. We only invested a little bit over $100. We're making ourselves an extra $3 per year. This is all on a weekly basis. So if we do, if we are able to increase our income by $3 every week over the next 52 weeks, we're basically increasing our annual income by about $156 per year, which isn't bad when we're, this annual income is just increasing slightly. 156 this year, another 156, another 156, and it just continuously compounds. It wasn't too long ago, just a few years ago, we were making less than $200, $300 a year. Now we broke 1,000. Soon our next break limit is $1,500, then 2,000. So from here, it's just going to continue to grow and compound and get larger faster. So I'm really looking forward to that going forward. Now, as far as number 5, what stocks are we buying? Now, I did just throw JP Morgan in here. We can see that big downturn right here in JP Morgan. It went from, it's now trading year to date in the negative. As far as where it started year to date, let's look at year to date right here. We can see here that year to date, JP Morgan started off about 158, 160. It is now trading at $134.40. So it has got beat up pretty good this year so far. The other position I had been looking at was Digital Realty Trust. We can see it started off the year about 176. I can actually throw the percentages in here. So let me get rid of the yield and I'll show you the percentages for the year. And then I will throw in here the the annual earnings per share trailing 12 months. Which isn't going to matter when I'm only showing a year to date. So maybe I'll look up 1 year for a bit here. And Digital Realty Trust is a REIT. So this net income or the earnings per share here, not a big factor in them as a business. But you can see overall, let me just go ahead and remove that. And then I will leave it year to date. So year to date, we can see that this position is down 21.28%. So as of this year, it has got a good beat down of 21%. Starbucks right here is down 23.03%. Off those highs of year to date, down nearly 0.25% there. And then we have JP Morgan here, just getting a beat down here of 15.12%. So actually, I'm going to go ahead and take a look at the past performance here. I'm going to go ahead and remove the percentages. I actually like JP Morgan at this buy price. I didn't really check them out. They may be still in a downtrend right here. We can see there's not a lot of support. So that's one of the issues with JP Morgan. There's probably not much support until $90, if that. So this could just downtrend. We can see we have a death cross here. We have the 50-day crossing underneath the 200-day right here, which is a negative sign for any company, right? It's a death cross. So this could just continue to sell off until it finds some sort of support, some sort of bottom. It may stop at 120. It could break through that and go all the way down to 90. That's the last time there was any sort of really trending support for a few weeks, months period. So I'm going to go ahead and set on JP Morgan. There's things that are going to be happening here in the short term that could offer them a better deal. Same thing kind of with Starbucks, but I don't mind Starbucks kind of buying it into the negative. If I throw the yield back in here, I'm buying Starbucks at a 2% yield, which is one of the higher yields since 2020 during that crash. If I look at JP Morgan, I'm not getting a high yield. I actually wouldn't mind, say, a 3% or higher yield on JP Morgan. I think there's definitely room for that to happen. If 130 can drop down into the 120s, 100s, or even lower, then we'll have JP Morgan offering a nice, sweet 3% yield. And then we have Digital Realty Trust. This one right here is offering a 3.33% yield, which over the past 3 years, you can see here, it's actually pretty high. Over the past 3 years, if we look at the 1 year, we're basically getting nearly a highest yield over the past 1 year. We can see here at 139, we do have some sort of support back here in this range. That's why I kind of feel pretty good buying Digital Realty Trust in this range. There's a bit of a double bottom right here showing signs of support. Here we had a bit of a bounce in that 130, mid 130s at 135. Bit of a bounce there. And we are offered a 3.33% yield, which isn't the highest. But, there's not very many periods where you're going to get that 4%. I don't think right here at 2020, potentially that crash, we were offered a 4%. But, you don't really see these 3 in a mid quarter of a percent there. So I feel pretty confident within buying Digital Realty Trust and Starbucks. So that is what I'm going to be buying this week. So back over to the calculator, we have 150.76 to invest between two companies. We're going to go ahead and copy that, and I'm going to go ahead and buy some Starbucks right there, and buy and continue and confirm, and done. Head back over to the portfolio. We're going to go ahead and pick up digital DLR, Digital Realty Trust, right there. Pick that one up, buy, and punch that in, continue and confirm. And there we are. We are purchasing two companies here on Monday morning. Right now, the portfolio, the market looks to be appearing negative as far as, yeah, look at that. I just refreshed. S&P 500 futures are down 1.27. NASDAQ is down 1.7. The Dow Jones is down 0.99%. Stock markets are sinking. The oil is rising. Every time oil's rised and, skyrocketed high, the potential for a crash had always happened in the future. Who knows what will happen in the future, but invested in the stock market is at the bottom of my concerns. If nothing happens out of this whole, Russian talk with the world of wars, right? If nothing ends up happening, that's the best bet for the market. Everybody who bought the dip during the whole turmoil, the uncertainty, the stock market will recover if that does happen, right? If something does escalate from that point, I think we're going to have much more things to worry about than me investing money into Starbucks or into the stock market. So I think we'll have bigger fish to fry if something kind of pops off afterwards. But if it turns out to be pretty, now I'm not going to say mellow because there's a bunch of chaos going on. But if it turns out to not be as big as an escalation external to what's going on right now, then the stock market will just kind of recover on its own. Plus, we have other inflationary things going on with raising rates potentially 5 to 7 times this year. But overall, we're just going to continue to dollar cost average into the market on a weekly basis, buying up wholesome companies that are just doing what they do, which is drive profits, make their products and services that they sell make people happy, and all that fun stuff. So that is my update of the week. Let me know what companies you're buying down below. If you have any comments or questions for me, always let me know down in the comment section below. I always read and reply to all your guys' comments, so really appreciate you guys checking out the video, and I will see you guys in the next video. Bye bye.